Welcome back, investors, to Ticker Time News. I'm Adam, and things have gone from bad to worse for streaming company Roku, ticker symbol ROKU. Already down 70% from last July's highs, shares are just getting pummeled once again following Roku's Q4 21 earnings report, which featured its first ever revenue miss. Now, heading into the report, there was hope that the worst of the supply chain disruptions that had severely impacted its TV manufacturing partners were in the rearview mirror. That just was not the case, though, as Roku expects TV unit sales to remain below pre-COVID levels. On its own, sluggish TV sales would be enough to worry Roku. Unfortunately, though, that issue is just the tip of the iceberg, explaining why so many investors were just throwing in the towel. So, what are the problems facing Roku and the stock? Well, before I answer that question, smash the like button, share this video, and click the first link in the description to get our top 10 stocks list and so much more. Thank you, my friends, for doing that. So, what are the problems facing Roku and its stock? Well, to start with, active accounts increased by 3.7 million from last quarter, for a total of 60.1 million in Q4. While this figure slightly topped analyst expectations, Roku warned that active account growth going forward could be affected by the supply chain constraints in the TV industry. Relatedly, due to low inventory levels and rising manufacturing costs, TV prices have shot higher by 40 to 50% year over year in some cases. And rather than risk losing potential new accounts, Roku has chosen to absorb those higher costs by not passing them on to customers. Consequently, player gross margin tanked by 31 percentage points year over year to a loss of 28.4%, causing total gross margin to fall by 3 percentage points to 43.9%. In Roku's much higher margin platform segment, mainly consisting of ad revenue, the news is a little better. Revenue increased by a healthy 49% year over year to $703.6 million, driven by an ongoing shift in ad spend towards connected TV or CTV platforms like Roku. The supply chain issue is raising its ugly head in this segment too, causing some advertisers to delay spending in certain verticals that are most affected by product shortages. By deciding to ramp up investments like headcount and content to protect market share and to support its long term growth potential, some may argue that Roku is throwing gasoline on the fire. With the supply chain still in disarray, the timing is indeed curious since those investments may not pay off until conditions normalize. And when are they going to normalize? At the end of 2022, at some point into 2023 or 24? Who really knows when those supply chain problems will, quote, normalize? Altogether, those items factored into Roku's dismal fiscal year 22 guidance, which calls for its adjusted earnings before taxes to match the 2020 level of $150 million. Not only is that far below expectations, but it's also equal to a 67% year over year decrease. That's horrible. Now, there's no sugarcoating this. This was an abysmal quarterly report for Roku. The company is taking hits from multiple sides, and Roku's guidance suggests that there's no relief in sight. Perhaps someday, though, with this collapse in the rearview mirror and we driving cars that are flying in the air, we may be able to see this decline as a buying opportunity. In fact, from a longer term perspective, I do believe that Roku still has a compelling growth potential as ad spending continues to shift away from traditional channels to connected TV platforms like Roku. However, It's going to take some time for the dust to settle from this implosion. Well, that's what I think about Roku and their earnings report right now. But I want to hear from you. What do you think about Roku investing at this moment in time? Is it the right decision? And remember, your comments make these videos so much better. Smash that like button, share this video, and click the first link in the description to get our top 10 stocks list and so much more. We've done the research so you don't have to. And if it's your first time watching, click subscribe. For Ticker Time News, I'm Adam. Thank you so very much for watching, and I'll see you in the next video.